Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about SINOPHARM interim report. SINOPHARM Group Co. Limited offers a diverse range of businesses and services across four main segments: pharmaceutical distribution, medical devices distribution, retail pharmacy, and other business. The company's key offerings include wholesale and retail of pharmaceutical products, distribution of medical devices, and equipment installation and maintenance services for medical devices, operation and franchising of retail drug stores, distribution of laboratory supplies and chemical reagents, manufacture and distribution of pharmaceutical products, import and export of goods, technology and investment services, business consulting, health consultation, and market information, consulting, convention and exhibition services, medical project investment, consulting, and technology training. These services cater to various sectors, including hospitals, clinics, retail pharmacy stores, and manufacturers, making SINOPHARM Group Co. Limited a comprehensive healthcare solutions provider in China. The stability of SINOPHARM's stock price over the past year can be attributed to a combination of underlying market conditions and specific news events. The company's inherent volatility has been stable at around 3%, indicating that daily news cycles have had limited impact on its stock movement. While significant news items, such as President Trump's tariffs announcement and SINOPHARM's interim earnings report, were released, their immediate effects on the stock price fell within a 0.68% threshold, considered no significant change. Analyst ratings and price target adjustments also contributed to mixed reactions, but their impact was often tempered by other market factors or anticipation of such developments. As a result, SINOPHARM's stock price has shown minimal fluctuations over the past year. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by the following factors: centralized procurement policies and national medical insurance negotiation for drugs, which have led to a significant increase in sales of national medical insurance negotiated varieties. Sales of medical consumables have increased steadily, with revenue from SPD and centralized distribution projects increasing by 13%. The retail pharmacy segment has grown against the trend, with a sales revenue increase of 3.65% year-on-year. Revenue decline is primarily driven by centralized procurement policies, which have led to a significant decrease in sales of medical devices and IVD. Volume-based procurement policies, which have resulted in slowing income growth and declining gross profit margin. Price reduction factors due to centralized volume-based procurement products. Net income and profit margins. A year of fluctuations, the net income of the company experienced significant fluctuations over the past year, with a decrease of 9.53%, followed by a slight recovery, with an increase of 215.81%. However, this growth was overshadowed by earlier declines, including a 3.52% and 2.46% drop in net income. Profit margins also underwent changes, with operating profit margin decreasing by 2.95% and then recovering to a 1.13 percentage point increase. The gross profit margin saw a decline of 0.34 percentage points, while the net profit margin decreased by 0.13 percentage points. The reasons behind these fluctuations include higher depreciation or amortization expenses and the decline in business results of joint ventures. These factors contributed to the overall decrease in net income and profit margins, highlighting the need for the company to address these issues and improve its financial performance. The company's debt level and interest expenses have undergone significant changes. Notably, the total debt has increased by 4.9% from RMB 310,604.69 million to RMB 326,491.61 million. Additionally, interest expenses have risen by 4.6%, from 2.62% to 2.73%. However, there are some fluctuations in specific categories, such as a decrease in interest paid and a reduction in interest expense in certain periods. Overall, the company's debt level and interest expenses have increased, indicating a potential shift in its financial position. The company's financial performance was mixed across various segments and regions. On the positive side, service income continued to grow, driven by contributions from marketing services, third-party logistics, and SPD services. The medical distribution segment also performed well, with an operating profit of RMB 1,097,505. Additionally, the pharmaceutical segment saw significant growth, with an operating profit of RMB 6,230,168. However, some segments struggled to keep pace. Pharmaceutical distribution and retail pharmacy experienced poor performance, while medical device distribution incurred a substantial operating loss of RMB minus 1,073,865. Other business segments also underperformed due to increased costs for raw materials and services. Furthermore, the other business segment reported an operating loss of RMB 83,976. Management's outlook. A stable future ahead. The company's management is optimistic about its prospects, citing a stable outlook with no significant changes expected. This stability is attributed to the growth of key business segments, particularly retail pharmacy and other areas that are poised to contribute significantly to group revenue in the future. There were no significant acquisitions or divestitures made by the company in the given period. The financial summary indicates a stable and unchanged portfolio, with no notable additions or disposals of assets or businesses. The company has a history of paying dividends to its shareholders. In the year ended December 31, 2024, it paid out a total of RMB 122,122,046,000 in dividends. This payment was made on August 12, 2025. The company also declared dividends for the years 2024 and 2025, totaling RMB 1,714,971 and RMB 1,122,046 respectively. Additionally, non-controlling shareholders received a portion of these dividend payments, amounting to RMB 683,626 in 2025 and RMB 10,906 in 2024. Concerns about inventory buildup and supply chain disruption exist, but they are not significant. Inventory turnover ratio has increased by 1 day to 44 days, indicating a slight improvement in inventory management. However, provisions for impairment of inventories have been made, totaling approximately $5,800 USD, suggesting potential issues with inventory valuation. Supply chain disruption concerns are also present, particularly due to geographical concentration in the PRC. The pharmaceutical distribution segment has seen decreased volume due to policies, and there is a risk that construction of logistics centers may take longer than expected. That concludes the financial summary for SINOPHARM. Feel free to comment below, and I will be happy to answer them when possible.